Good morning, everybody. Welcome to the Swing Trade Room. It's also Market Monday for everybody out there with us on YouTube. I hope you're all doing fantastic today. Hope you're having a wonderful day. Let's jump into the market. Let me pull this up. I know we're getting kicked off just a couple minutes early here today, but that's all good. All good. Looking at the market, we actually were taking a bearish position here. If you took that trade, you would have made money. So, Karen, did you take that trade? By chance, I know you're in the trade room with us, the day trade room, anyway. I did. It was a really pretty trade. Took a little bit of heat, 7-point risk, took a little bit of heat against us, then drop, hit that first target. It was pretty. If you took the option on that, you had about a 16% risk to make 13. And then if you took it with the Q puts, which that was the one I took, 15.5% risk, you're up 26% just in 10 minutes. So really nice trade. Really nice trade. And now looks like we're going to try to reverse back up and come back through the range. We'll see what that looks like in just a minute. All right. So we got a couple things going on here. This week. First thing, it is a shortened week because we have Good Friday on Friday and the market's closed. They do observe the second greatest moment in human history, which is the crucifixion of Jesus. The first greatest moment is his resurrection. I think that's fun that even the markets observe that. Pretty cool, man. Pretty cool. We may even talk a little bit about Good Friday on Thursday because you can't have a Good Friday is never good on the day of it. It's only good in retrospect. But we may talk about that on a different day. All right, looking at the markets today, where are we at? What's going on? S&P gapped up this morning. We had this nice gap up, dropped, filled the gap, liked this inverted hammer. I was looking for the continuation move lower here to go take out that low of yesterday, and sellers said, I ain't got enough momentum. Buyer said no, pushed it higher. Good move up. I'm expecting some type of bounce this week, just to be honest with you. We're very extended to the downside here. Really quick moves. I mean, this was a quick. Look at the symmetry here, by the way. 3% drop, 3% drop, almost a 3% drop, little over a 3% drop, and then a little over that 3% drop. Like that is just crazy symmetrical. To the downside, I would imagine we kind of run back up towards the quarterly engulfing target, which is 65.08. Let's see what this actually looks like for a second. What's April 2nd? Let's add some strikes. I mean, 6,500 would be a great target. 6,400 is not a bad target. We may chop sideways. I don't know. Let's see how this plays out, though. I would like to see a rally kind of back up into 6,500 and then roll back down and drop. When we throw our moving averages on here, you'll see this is extremely bearish looking. This is extremely bearish. You've got the green, which is our 8 below the 21, below the 50, right? So green's 8, 21, 50, and then all of those are starting across the 100 now, and we're below the 200 EMA. So very bearish look here in the markets. And we started talking about this bearishness back here. In fact, we actually talked about it back here in January, where we said, hey, let's look for this continuation move lower. And we've gotten that to play out really well. Let's look at the 200 SMA. Below that also. And so at this point, what I would be looking for from a moving average standpoint would be a rally back up. What I was hoping for last week was actually to tag that 21 EMA and then drop. And we didn't do that. We just hit the 8 and it fell. So We are kind of extended, a move back up into that 8, maybe a little higher, and then a drop. Or if this kind of moves up and we just shuffle sideways like we did roughly here and here, a move up and shuffle sideways, and then open Q4 and April, I'm sorry, Q2 and April with a drop, that would give us something to get short against. We could use this 65.94 as our stop loss and look for this drop into 61.87 and then below. All right. So coming into the end of the quarter, I just want to make you guys aware of a couple things that I'm looking at, that I'm watching for, that are of interest historically to us. We'll go through the actual indices and then we'll kind of look into those. But here's your Dow. It went quarterly engulfing as well. Moved up. It failed. Right now we're getting this kind of bounce back up. This had a really nice looking short opportunity last week. And I was like, man, this is already so extended. We've hit targets. Let's just be careful. This would have been good for like a 1-day trade. And yes, you still could have been lower here, but this to me is not near as bearish looking as the actual S&P as of yet. It's still bearish, but just not as bearish. And so again, any move back higher, that's where we're looking for this to roll over. So I'm going to do this. I'll get rid of those words. NASDAQ, it's up about 92 points. This looks really bad. You can see it broke yesterday's low and it's continuing. This is very extended down. And so from a daily chart, to move back into 23,750, maybe 24,000 would not be a bad idea. Putting these moving averages back on here, you can see how far we are from that 8. A jump into this 8, really this 200 dotted line and this 21 EMA. If we can kind of come back into that zone and fail, that's where I would really look to take a nice bearish position here in the NASDAQ. Now, again, we were talking about bearish positions up here. You can kind of see the shelf. Let's do. So from a structural standpoint, do you guys see this shelf that's here? Bueller. There we go. All right. Thank you, Ryan. All right. And so here's what we're looking at. There's that move up, drop, move up, drop. And so what we'd be looking for here would be this next move higher, back into that trend line, hold, and then fail again. So if we can kind of come into this 24,055, 24,001 and only have a couple $100 here of risk and roll over, this to me would be a great place for us to start looking for like the inverse ETF, maybe get some puts on QQQ, something like that for that next leg lower into 22.6. That would be a really nice spot for us to consider. Last but not least, we've got the Russell. If it goes to it. There we go. So here's the Russell. We've not gone quarterly engulfing on the Russell. This is the quarterly engulfing target down here, but we are hitting that quarterly level, which is the quarterly close of last quarter. And you'll see that here, right? So that, I'm sorry, the quarterly open, not the close, quarterly open. So a big inverted hammer here on the quarter. Honestly, if this would break down like that, a rally back up would be pretty, but if this could break down, I mean, maybe we could take a short position against 2,500 as a stop, looking for the move to 2372 and then 2,300. We're probably not going to get here unless something major happens. Like super duper bad. And we don't necessarily want that to occur. This would be a 4% 100-point drop. What do we need here? 200. I mean, we need 6% drop. That would be rough. So we'll see what happens on that. And Overthinker says on YouTube, when is the next toss onboarding? I missed the previous and never received the replay. The replays were posted in the enhanced membership learning portal, but we are going to host another one coming up probably next month. We had a lot of new people come in March, and so I want to give everybody an opportunity to go through the onboarding that we had. Let me just put that up real quick so everybody can see it. So if you're in your courses, it's right here. It's posted right here, so you can go watch that. But I also want to give people an opportunity to go through it live and ask questions live, because sometimes even if you have a walkthrough video, it doesn't, regardless of how good the walkthrough video is, sometimes it is very helpful to have somebody walk you through it. I didn't have my camera turned on. Sometimes it is very helpful to have somebody walk you through it live. Does that make sense? And so that's what we would be trying to do from there. So I'm going to talk to Ramez about that, see if we can get something on the calendar. All right. Back to the markets. What I'm looking at here, guys, isn't just where we're at and what's going on. I want to show you what has historically happened. Okay. So if we go historical here on the S&P, and we look back to 2020, all the way back to 2020, every engulfing that we've had, and we know that the trade spotter denotes an engulfing candle as a blue. Every engulfing candle that we've had, bearish, started out firstly in Q1. So it was a Q1 engulfing from Q4. And from that, we had a continuation drop in 2020. For COVID, this was a 23% drop. In 2022, this was an 18% continuation drop. Last year, this was a 14.7 continuation drop. This is over an 18% drop. This is an 18% drop here on average after the break. And so if we were to chart that out, that puts us on average getting down here around 5,300. All right. So what we want to do, we'll just make it 53 even, because that'll make life easy. All right. Average continuation drop from quarterly engulf. Let's make this a red bar and make this 5,300. There you go. So this 5,300 is roughly that 18% continuation drop. All right. Now, what do we know about engulfings? We know the earlier a dark candle can come and take place, the higher the probability of the engulfing becomes. Does that make sense? What does that mean? So currently, and we have to see how much time is left for it to actually take place. And this is something that we kind of get into in our day trading course. But I'll give you a little crash course in it right now. So right now, if I look at the ES lower time frames, 15-minute, 30-minute, and 1 hour, we are trading with 3 minutes to go till the next 15-minute candle. We have an inverted Harami. We know sellers are in control. How do we know? We have the large wick, we have the open, and it's dark. Dark goes down. Sellers are in control. If we're saying, hey, this is going to go 15-minute engulfing, that means it has to go all the way down here to go engulfing, and it has to do that in the next 2 minutes. Now, while anything is possible, the probability of this dropping 20 points in the next 2 minutes is really low. Does that make sense? Y'all with me? All right. Thank you, Mark. However, we could still go engulfing off the 30. And so for a 30-minute candle to drop 20 points in the next 15 or 17 minutes is not as ridiculous, right? Yes, this is possible, but this is more probable for that to happen. Y'all with me? So while this is possible, it's not probable. This is more possible and probable. Well, if we go to our 1 hour, I now have 45 minutes for this to go engulfing, and that's 20 points in 45 minutes. That's less than 3 points a minute. Or I mean, that's less than half a point a minute. That's very, very probable and possible. Y'all with me so far? So when we're looking here on the S&P and we zoomed out on the monthly, and I told you guys, hey, we have the possibility of going engulfing on the quarter. We started talking about that at the end of January. And the reason is we took out this January low and we didn't close strong. And then in February, we really started talking about it. And then in March, I told you guys it's basically a certainty, right? Y'all remember us walking through that process? Okay. So that being said, we had enough time to drop 4.5%, and we've actually dropped 6.7%. If we go to the daily chart, this is kind of where we were looking at. This is what we were looking for. And I think this is the day that we actually started talking about us dropping somewhere back in here. All right. Okay. Why am I bringing that up? Because we're in Q1 of the year. This is a 9.23% drop. There is the possibility of going engulfing on the year. Now, the only time of the last 3 times that this has happened was 2020. Actually, it's happened twice. We went engulfing in COVID, and we went engulfing in 2022. So we took out the high of the quarterly. So 2 out of 3 times that we've gone engulfing, we took out the high and went engulfing on the year. We took out that high, went engulfing on the year, and then we rallied all the way back up. There is the door open for us to drop and actually go bearish engulfing on the year. This would require another 30% or 24% drop. This would require another 24% drop, and we would essentially end the year down roughly 30% on the S&P. Is everybody good so far? And so what I want to do is see the way we will know this. The way we will know this is depending on what happens next quarter and this level. So I'm going to make this green, and I'm going to call this 2025 open. We'll call it flip because it flips 2025's open. And we will make this red. No, let's not make it red. About, I don't know what. Somebody give me a color. Somebody give me a color. We want to flip this. What do you guys think? Do like a A&M burgundy, Texas burnt orange. What do you want to do, Dennis? Purple. There you go. Dennis will leave if I say that again. All right, so we can use that dark purple. Okay. So what we're looking for here currently, let's go back to the quarterly chart. What we're looking for here, we've already gone engulfing. That was the engulfing target. We took that out. And like, dude, you have so many lines drawn on here. I don't know which ones to follow, et cetera, et cetera. Okay, let's delete some of these. That was our target. Our next quarterly target to the downside is 61.87. That's our next quarterly target to the downside. So if in April, which opens up in 2 days, we drop, let's actually use proper colors. We go black and down. The goal is to 61.87. If that happens, depending on where we hit in Q2, 5,900, we will probably get some level of a bounce. Because we've got a close and an open right here on our quarterlies. And we know this is 2025 open and it flips it short, which means buyers will defend this level. Is everybody with me? All right, so we've got a couple of targets here. If we drop target 1, 61.87, target 2, 59.03, the second quarterly target, if we get a continuation move lower, is 55.97. Then we have 5,300. That's the average drop from the last 3 Q1 engulfings. Then we have this drop into 48.35, which is the final quarter look here. And then we should have, go back to a yearly. And this would be a yearly engulfing. Yeah, that would be our yearly engulfing. So 48.35. So if we get a continuation move lower next quarter, that opens the door to go to 61.87. Once that happens, your next target's 59.03. Once that happens, it's 55.97. Once that happens, now we're going to 5,300, which would be the move, the average move here. And if you're like, Mark, how did you get that? I'll show you in just a second. Then 48.35, which would be a bearish engulfing on the year. So the question you got to ask yourself is, do we have enough time to go bearish engulfing on the year? Okay, so that's a 1,500 point move. We had just dropped 646 points this quarter. So if this quarter's drop, 646, holds in the next 3 quarters, that's a 1,900 point move. If we drop 1,900 points from where we're at, you're down here at 4,000 and some change. So yes, we have enough time to do that. Make sense? We have enough time and potential momentum to do that. I'm not saying we will. I'm just saying we have enough time. What we do is we're going to take this area by area, which means we're going to try to take this If we get the continuation drop, our next target 6187. That's our next bigger target. If that breaks, our next bigger target is 5900. Why? That flips 2025 negative. We erase all of the gains from 2025 from a market standpoint. If that breaks, now we're going to 5597. Why? Because that, look at this. This is almost the Q1 close and open of Q2 open of last year. If that breaks, the ultimate goal is to go take out 4835. That's the ultimate goal, and that would go engulfing on the year. So again, this is over the last 10 years. This is a 10-year history of the S&P. Engulfing, continuation move. Back in COVID, we dropped 23% from when we went engulfing. So if we had that move, that alone puts us down here at 5,000. This move, when we went engulfing, was 18%. So let's do this. Let's go 23. Let's add these together. 23.25 plus the prior drop during whatever this was, 2022 is 18.4 plus the tariff drop of 14.79. That's 56.44. If we divide that by 3 to find the average, you're looking at 18.81. So an 18.81 average is going to put us down here around 5,300. Does everybody understand how we're getting all this math? Now, I'm not saying that to scare anybody, but what I'm saying is I'm showing you this so that you can prepare and mentally adjust your thinking so that you can understand, okay, when this normally happens, we normally get more downside. So let's add a little bit more time here. Let's just go over the last 20 years. So if we go over the last 20 years, we've only had 1, 2, 3 bearish engulfings. This was a bullish engulfing. Here's a bearish engulfing, but it was a Q2 engulfing, not a Q1. And then from that engulfing, we only dropped 3%. Right? Not a big deal. And that was already coming off the 2008 crisis. So since 2008, we've only had a total of 1, 2, 3, 4, currently number 5 bearish engulfing movements using current. So let's go 4. Let's not count right now. So we've only had this happen 4 times. 3 of the 4 times it was Q1, and it was followed by an average of an 18% drop. Highest being 23, lowest being 14. Is everybody with me? Now, I'm not calling for doom and gloom. I heard a guy say one time that the problem with betting on the end of the world is only going to happen once. So I'm not doing that. I'm actually very, very optimistic in my eschatological views. Okay. All that being said, it is worth noting. It's very much worth noting. Now, if we go to max available, and let's just go to here. If we look for Q1 engulfings, like here's an engulfing in 98 that happened. This is a bearish engulfing. It dropped 13%. Here's an engulfing that happened in 99. It dropped 3 extra percent. Here's the drop of the 2000 crash, right? No bearish engulfings. This one did go engulfing, but it's more of a hammer. And then here's the 08. Let's see what NASDAQ did. I bet NASDAQ had one in. Oh, it didn't. Okay, cool. I figured the NASDAQ would have had one, but it did not. If we look at the NASDAQ, same thing, right? Here's your bearish engulfing, 15%. This did not go engulfing. This is a bearish engulfing, 9%. This did not go. And then none of these other ones would have had any merit. So really, since in the last 20 plus years, the math still works out. Again, not trying to scare anybody. All I'm saying is I want to be prepared for what could happen and take place this year. Our heart for you guys, as always, is that you make a ton of money trading. And so let's pretend that we're right here, and this market does drop, and we get to this average, and the market's down this year 24%, but you're positive 15%. Right? Let's just pretend that. Let's make life easy. Let's say the market's down 25 and you're up 15. Right? So the market's down 25, you're up 15. That's a 40% swing of what you would have to what you do have. That's a heck of a year. Does that make sense? Like you just beat the market by 40%. That's a good year. Y'all with me? And so that's kind of what we want to look for. That's what we want to prep for. That's what we want to prep for. Okay. Again, we're in a bearish environment. How low does it go? That's the question. So Jeep asked the question then, how can we novice traders best prepare in terms of how to trade in the coming market? What do we need to review? I would review your options courses. If you have debit spreads, credit spreads courses, review those. Day trading course, review everything you've got. And the reason is, remember market structure, right? Here's your low, high, higher low, higher high, higher low, higher high, broke a low. This is when we started talking about a potential drop. Retest a high, broke a low, lower high, lower low, transition, drop, downtrend, downtrend, downtrend. Make sense? And so how are we going to take advantage of this? There's a couple of ways that we would take advantage of this. Number one, we take bearish positions, which means we make money as the market goes down. And so if we look at the different tools and strategies that you guys have available to you to make money, if you kind of, I need to make a little chart for you guys. So if we have bullish ideas and bearish ideas, right? So we use bullish when the market goes up. We use bearish when the market goes down. So your bullish idea is you buy shares. This would be short or, which I don't like doing, inverse ETF. And we'll talk about those. So if all you know how to do is share trade, this will be your huckleberry. This is what you're looking for. And we'll talk a little bit about that. Right? Bullish, you buy calls. You do call debit spreads. You do put credit spreads. Here, you buy puts. You do put debit spreads or call credit spreads. Does this make sense? And so if you know how to do options, this is what you're doing. If you know how to do spreads, these are what you're doing. If you know how to day trade, it doesn't matter because you're going to make money either way. Like this morning, we made money when the market went down. We made 2 or 3 really good trades. Currently, I'm ending the day. If I don't take another trade today, which I probably won't, I'm ending the day up over $1,100 in an hour. Y'all with me? All right. So that's day trading. We don't care about that. However, if you're swing trading, then what we're going to focus on here is your inverse ETF and more than anything, protect capital. Remember when I told you guys that the greatest thing you can do as a trader, the greatest risk to your money as a trader is avoid large drops? Who remembers me talking about that? The greatest thing you can do as a trader is avoid large drops, right? So if this market has another potential 18% to drop, and you can avoid that, in order to get back to even at 18%, what do you need? 22? If I have $1,000, I lose 880. That puts me at 820 times 1.25. I need to make a 22% return, right? It's pretty good math on my part on the first guess. I need to make a 22% return, right? But let's say the market drops 30%, right? And I've got 700 left. In order for me to get back to even, man, I got to make what, 45? $40 to 45% just to get back to even. And so if this thing drops and you don't lose money, you're winning. If this thing drops and you make profit, you're crushing it. Y'all with me? Then hopefully we'll have a lot of these really good stocks at great buy points. We buy those and let buy and hold rip higher. You let your swing trades rip higher, and you're winning 3 or 4 different ways. Is that cool? All right. Everybody happy? So this is kind of what we're looking for here. Okay. Gold getting a good pop up. Silver also getting a little pop up here today. I like the support at 4,200 here on gold. I don't know if I want to be a buyer here yet or not. I like the support here at 66.85, trying to establish on silver. This is really nice as well. What I'm hoping for, and you could see the drawing that we had here from, last week, and it kind of failed. But notice we have a higher low potentially in place, right? You guys see that? So here's our higher low. If we break this high, that's a transition, a move up and pullback. Now we can look to get bullish here for that move up into 83, maybe back up into 90 and 100. That would be ideal. Let's see if that plays out. Okay. Let's see if that plays out. Bitcoin still holding this $65,000 area. I was really hoping that this move up last week, kind of this 3.4, 324, 325 area, that this was going to break higher. We didn't get that. I really wanted to continue this trend up. It hasn't happened. Maybe this just channels. I don't know. So I'm still going to be patient here. And then Merck, I think I'm going to stop out of this today, to be honest with you. We're nearing that stop loss anyway. I've got good profits on this. We took an entry on this on 324. We've hit first target. I had our first target up here at 120. We filled the gap right here. This little guy, that little gap open right here. This was a 23-cent move. We filled that to our gap fill. That was 4.5% return. This was, $5. This is up 527. Now we've popped all the way back down here. So worst case scenario, I've locked in 1.5%. Not terrible, but I obviously would have liked to have taken gains at the tip top. You always want to take gains at the tip top. I kind of want to see how this closes, but for us to be in as bearish of an environment as we've got and have a trade that's working to the bullish side, to me, is very, very fortunate. So I like this. We got into this trade really before the market just rolled over super hard. This was a nice transition, and it's still transitioning. We could easily see support form, turn up, and then get to 124. And so I want to give this till today. I want to see how we close. But if we close like this, I will stop out for a gain. Make sense? I'm not going to lose money on this. Let me put it that way. I'm not going to lose money on this. So I would rather stop out for a small profit than it roll over tomorrow, and now we're back down to 113. So I will stop this out today, no problem. Moderna, this is also rolling over. This is one reason I'm not a fan of the pharmaceuticals now. If we go to the actual index, XLV, which is healthcare, this was trying to get that pop higher off that 143, and it's rolled over. It looks like we're trying to find support here. It's just not doing anything. If we go look at other names in the industry group, Pfizer doesn't look bad. Eli Lilly is the leader of this whole industry group, and it is significantly off highs. This 1200 high. What's interesting about Eli Lilly is it had a nice channel back here from 700 to 840. We traded this off the weekly a couple of times, and then you had that big breakout. This could go revisit that channel back into 700. If that happens, it will probably pull the rest of your industry group lower, Merck being one of those. And so the fact that this broke new highs and it sold so quickly, not a fan of that. I'd rather go ahead and just take this off the table if we close this low. So I want to give it till close, but if we close this low, I'll take it off the table. It'll be a profit. Everything else, I'm still watching here. GM, this was a bearish idea at 77. This kind of rolled over, got that quick drop. I want to see if the 73 holds or not. Walmart, I was watching this for a bearish idea. I wanted to see if we got follow through today. And you can see this downtrend kind of established. I liked this inverted hammer. And so what I was hoping for is we got follow through to the downside today on Walmart, took that out. That's our stop. And then we come down here, no trigger, no trade. We did not get a trigger on this, or we're not taking a trade on this. You can see the uptrend still intact off the 30-minute. We don't have the transition and the downtrend move. Tesla, this is beautiful. This is beautiful. This was a beautiful short last Thursday. Coming on down. I think this probably gets to 350. I'm not going to chase that though. We replace, we don't chase. Netflix, still trying to hold up this gap. Now, this was news from them pulling out of one of the deals of buying somebody, right? What day was this? 227. Was it Telecom? Whoever they were trying to buy, the HBO Max people, they quit trying to buy them, and it gave an insta jump here. If this holds and we can start to channel, I wouldn't mind watching that. Coke, good move back up. I'd love to see this hold and roll over for another leg down. Nothing here with IoT. It broke pattern. Great jump on Alcoa. Can't do anything there. We were watching that for a potential channel. It's broken down. Google, we talked about shorting it back here. I don't know if anyone did or didn't, but that made crazy good money if you did. Thank you, John. They were trying to buy Time Warner. Solar Edge. This honestly is like one of the better bullish trades I found. Let's look at this off the quarterly. Solar Edge, this is a solar company that just got destroyed, absolutely destroyed from these highs. Here's your drop. You're at these lows. I mean, this has a massive mountain to climb. You're looking at, 2,800 to 3,400% potential move to try to get all the way back up there. I don't know if that'll ever happen, but looking at this, here's your drop, found a great quarterly support. Here's your move up, inverted hammer, and we just took that out. So from a quarterly standpoint, this is still bullish, and I'm looking for this thing to go to 71. Now, if you're like, well, you just said the whole market could continue to drop. It could, but this might be a honey badger in that market. Inverted hammer, engulfing off the monthly. It broke to the upside, hit your first monthly target at 50. Your next target is 58.80. And then from there, we're looking to go to 71, which is also your quarterly target. So all that being said, I wanted to watch this on the month or on the week because we had this nice hammer harami on the week. If this breaks up, you've got a 13% risk to make 12 or 11.3 and then potentially 34 with that continuation move. So I wanted to kind of keep an eye on this. even from a weekly standpoint, like your next target here is really 58 and then 60. And then you kind of have the 65 and 71 area. So I liked this. We've got an engulfing right now. We haven't triggered the weekly. What would be ideal for me on this one? And this, I would still want to see the market do some stuff. But if we can come back to this 46 area, you see this resistance? We've got this resistance, gap up, pull back, rally. If we come back into this 46 area, hold and turn up, like we get a little trigger right here, get that trigger, I could look at taking a bullish starter position, hold a nice easy stop, look for this retest, then into this next monthly target, because we could get that. We could get those continuation moves. So I wouldn't mind keeping an eye on this. That's why it's on the list. I really like the way this is set up off the weekly chart. This just looks, from a structural only standpoint, this looks nice. This looks nice. So let's watch this one. Let's watch this one. Let me zoom back in here for a second. Lows. I like this inverted hammer for a potential short back to 212. That is a awesome monthly uptrend, though. That's a very pretty monthly uptrend. Quarterly chart could go engulfing. I doubt we do. But look at your 212 support on the quarter, and then you've got that 207. Both of those are really strong areas. If 235 can hold, activate this guy. You guys see that resistance, resistance, kind of resistance, support, resistance, resistance, support. You guys see all that? If this 234, 235 area can hold this week and roll back down, I would look to take this short. I like this area. I mean, this looks pretty clean for a bearish opportunity. Obviously, we're not there right now, but this looks pretty clean. So I'm going to add this to my notepad list. It's already on there, but do it again. It's got them apple bottom jeans. CSX, this is another potential bullish trade. Look at this weekly, pullback, move up, pop. Transition here on the daily. Let's see if this holds. That's a potential bullish trade like Solar Edge. Zoom, I'd love to see this roll down, give us a 30-minute short trigger. And we could use 80 as resistance for the drop into 70. We'll see if that plays out. And then we're just waiting on a lot of these other ones. Cypher's dropping quite a bit. Academy having a real hard time here at 55. I mean, whatever this earnings was, we have, I don't even know if we've broken. I don't think we have. We did barely. We barely broke this opening high range here. Now, we've been looking to take this bearish, but we don't have a trigger yet. I mean, we've got zero trigger here on that 30-minute. It's a wedge. If this resolves to the upside, we probably feel that gap, right? We probably feel the earnings gap. And if that happens, maybe we hold this 54 and try to channel to the upside. This is a stock that does like to channel. I'd rather see this drop with the rest of the market. BJ is a bullish idea. This broke out, pulled back, waiting on that. And then Fortinet coming into support yesterday. No trigger yet. We're trying to work a trigger here. We have not taken out a high. We haven't fully broken this 30-minute downtrend yet, but a beautiful channel. What I would like would be another repeat of this, where we kind of chop down here for a couple days and then move up. Let's see if we get that. We may end up missing this, but I'm okay if we do because of that. Maybe we have this higher low. This is a higher low. This is a higher low. And so maybe this is going to start uptrending. The only thing that makes me think it's not is we have that downtrend. You guys see that? Kind of looks wedge S here. So let's just kind of keep an eye on that. UAL's failing. Teva, this is another pharmaceutical company. Looked like we were going to try to transition here. It did not work. Palantir rolling over. Any move back up into 147 and drop, I would look to short Palantir. So that would be a bearish trade on that. I'm going to get rid of this. This is bad news for chip manufacturers. We talked about this in our boot camp for everybody who was there with us and in VIP. I encouraged everybody who was in MU, take some gains here before earnings. You don't want to see this roll over and just continue to drop. Did I have any VIP people from the last boot camp who were in here? There you go, Doug. You remember talking about this? Ryan, you remember talking about this? Take your gains, move your stop up. You don't want to see this break and drop, right? And, what's this represent? 30% give back of profit. That's huge, man. That's a huge deal. Notice, though, MU has broken all of the support, right? Like this 350 area, this was a potential channel. No trigger, boom. Easily could get into 300. That's an engulfing on the month. If this continues, now we're going to 300, possibly 230, possibly on down to 164. And I know people are like, man, there's no way it's going to go from 500 to 164. Like it went from 59 to 475. Like that's an insane move in a year. That's 660%. All right. If this keeps closing, inverted hammer, and then breaks, if we close here and break 294, the next target from a quarterly standpoint is 165. I mean, you've got some areas in here in between, but that is not good. And this is not good for chip manufacturers, right? Because MU's was leading the way in some of those. Shop trying to find some support. I don't know if this is going to channel or if it's going to roll over and die. We were looking for this move up into 136 and then 146 and 150. This is rolled over, so it's kind of ugly. Rocket Lab not looking great. NVIDIA, I love this. Oh, I love this. Move up, drop, move up, drop. We're looking for this move back into 175 and drop. Or if it wants to hang out here and then drop, I'll take that too. And so if we go to your weekly, engulfing, right? Continued, I'd love this to come back into 175 because look at that monthly support. See that monthly support at 175? Close, wick, open, a retest of that and failure and take out 164. This is dropping to 150. If that drops through 150, that's your quarterly drop. We've already flipped the quarter. So any continuation move on the quarter now, like this, we're going to 151. If that breaks, you could go to 100. If you have a company like NVIDIA, which is the largest market cap company on the planet, that drops like that, that's enough alone to pull the S&P down. Apple still going opposite of the overall market. Again, same situation. If Apple breaks the next quarterly low down, the target's 200. So the second largest market cap company on the planet could potentially have a downside of 15% next quarter. NVIDIA downside of 10% to potentially 35% in the next 2 quarters. That's enough to drag those. That alone is enough to drag the market lower. Meta, this is a dead cat bounce. This just got smashed Thursday. Absolute destruction here. This looks bad. Microsoft, same thing. Both of these extended to the downside. So we need some type of pop back up. Microsoft, I would imagine, is going to go break this quarterly low. And that would be a break of last year's low at 344. So it's got a little bit more downside to go grab. Again, even on the weekly, you guys see this looks extended to the downside. Like a move back up makes a lot of sense. Can y'all see that? YouTubers, can y'all see that? All right. Amazon trying to hold up. If 198 breaks, now we're looking to get into this 193. That's a weekly gap open. That looks really good to the downside as a downside target. We tried to get this little uptrend on the daily working, and it just struggle bust. So a rollover here, I would like to see that short. AVGO, this is breaking bigger support. I really wanted this to retest that zone, but again, look at your inverted hammer engulfing off the monthly. We go to the quarterly. Our quarterly target here is 275. Very similar drop here. TSM, this has been one of the strongest chip manufacturers. I mean, buyer's still in control on this yearly or the quarterly. We haven't flipped it dark. With this inverted hammer, a breakdown, you're going to 270. Let's get rid of some of these. That monthly's jumped. I mean, that's nasty. This would be a gap fill that we're trying to get to on the monthly at 300. We've taken out this low. Our next weekly target is 303 and then on down. And you can kind of see that opening price of the year is going to be our target right here. Any move up, we would be looking to short this. We'll pull back here in Schlumberger. CoreWeave dropping. Costco moving back up. This could be channeling. Let's keep an eye on that. Prime Medical finally coming into support. Finally coming back into support. Let's watch this. I'm not as keen on this move up I'm not as keen on this move up as I was back here because the medical industry is kind of changing. Does that make sense? So what we're seeing in the medical industry is a little bit different. We just want to be aware of that. Again, downtrend established. Any rallies on the downtrend, that's where we're looking to short and get bearish. SMR almost back to its IPO price. This has just been a slow fade. I'd love to see this transition and then take some bullish positions on that. Allstate holding up really well. You've got these metal companies. I'm kind of watching these. Now, if NOV wants to channel from 18 to 20, we will say yes and amen. Faux show. TVN continuing its move higher. That's almost parabolic. Bloom breaking support. This one kind of surprised me, to be honest with you. This is surprising to me. I really want to see this 131 hold as support, turn and come back up into the 168, especially as an energy company. The fact that this is rolling over so strong, it's got to have some kind of news to it. Chief Financial Officer. All right, let's watch in case the mighty falls here. A continuation move on the monthly. Would drop you into 90. Weekly chart drops you into 104. Watch this 113. Close, close. There's your resistance, resistance. Try to be a little support, broke above it. If this could pop up, hold 132, and then give a trigger down, we could actually take a short against this with that 135-ish being our stop. Looking for a drop into 104 and then 97. The only downside here is your volatility is going to be really high, and I wonder how good your options are going to be. Let's go to here. Open interest isn't terrible. Let's go to May. You got great open interest. Your spread's a little bit wide. I mean, $1 is not awful for this. But if we were to try to do a spread or something, you only got 50 cents. That's not bad. All right, let's see what this does. Let's see what this does. This could be a good short on a move back up into 132. So let's go ahead and put an alert here. Go to create alert, notes, back in potential resistance. Look for 30-minute trigger lower. And then right here at or above, boom. So if we move back up into that area and fail, that could be a really nice move. We'll move this up our chart as well. Aurora, maybe back in support. We'll watch that. Do love me some Kava. Boy, if Kava was close by, I'd hammer that for lunch today. Let's watch the $75 area. No trigger yet. We are trying to get a bounce. And then OLN moving up. All right, so let's move Bloom up. And then Merck, this is going to be a stop. We'll stop this out today for sure. All right, had a couple questions come in. Can I address the talk of SpaceX IPO, how to approach it? I'll talk about IPOs tomorrow, Jeep. If you'll bring that back up, we can talk about IPOs tomorrow. I'm not going to have enough time. I typically don't trade IPOs. And tomorrow I'll tell you why. Aflac trying to get back in support. This isn't bad. Whoever threw this out. Jim Williams, well done, sir. That 107 sure does look appealing, doesn't it? Do we have a trigger? Yep. It's a good weekly level, too. It's not bad. What's our stop? 3% to come up and make potentially 5-ish. And then I would watch this level here at 111. Let's see how this closes. I'm not sure how bullish I want to get. Let's see how we close and how the market closes. Fair. But I like this. I like this. All right. Again, just let's be careful here on the day. This is still a bearish Harami. If we open and break down tomorrow, I mean, we could be at 6,300 by the end here. ES futures right now, we've got a 30-minute inverted hammer Harami. If this breaks, I'd love to see this 30-minute hold too. But if we had a 30-minute break, we're probably going to the lows of the day, 6408. That's kind of our bigger downside target. We've got the almost the exact same look on the NQs for you day traders. So be watching that. There's your NQ double Harami off the 30. And then you have this drop in a potential 5-minute continuation move down. So let's see what happens here. As far as our trades go, we've got Merck. This is just continuing to fall at this point. You know, good start and drop. If you're like, hey, intraday, if this breaks below 117.30, I'll cut it. I mean, that's only 50 cents. So to me, that makes financial sense. We put it that way. You make about 1%. You know, we were up 4.5 today. You're giving some back. You should have a runner at this point. Good trade. We've made money. I'll stop it out today if we close below 117. Everything else I'm waiting on. I'm not looking to get into a new trade here. Not yet. I do like Bloom short if it rallies. Walmart on a turn here is not bad. It'd be better if we were under these moving averages. I liked yesterday's look better, but even if this drops tomorrow, there's no way I can get bearish today. But if this were to drop tomorrow, I could look at that. Tesla's extended. It could still keep dropping though. So that's kind of where I'm at. I'm going to move these big names up just so I can kind of keep a pulse on those. Let's move these guys up. There we go. All right. So all I'm going to do here, I'm going to manage Merck. I want to see what happens. Oh, we got some news. What's the news? Results from a third positive phase comparative study on athletic cardiovascular disease. All right. I'm going to manage this position. We'll wait from here. We'll see what happens and then try to position ourselves Tuesday, Wednesday, Thursday. All right. We'll position ourselves Tuesday, Wednesday, Thursday on everything else. All right. That'll do it for us today. I love you guys. I hope this was helpful. I hope you had a great market Monday. Go rewatch this session and kind of look at the roadmap that we could be going into Q2, Q3, Q4 of this year, and just prepare yourself for it. All right. So again, all we're trying to do here when we're talking about these quarterlies, all we're trying to do here now that we know this has happened is prepare for what history has shown us, right? I'm not saying this is going to happen. I'm just saying historically, the last 3 times this has dropped, this is where we're at. Okay. So go back, watch that, see what happens. And, if it turns out that happens again, hopefully you'll be positioned to make money on it and or not lose profits that you've already got the last year, 2 years, 3 years. All right. Love you guys. Have a beautiful day, and we'll see y'all on the DMU. Thanks, team.